Good afternoon and welcome to BizTech's Asian Midday Market Watch. It's the 4th of September and we have our Kelvin Wong, Senior Market Analyst at Oanda, as our guest today. Kelvin, great to have you on the show this Monday morning.
Hey, my pleasure, Brian. Happy day, happy
Oh,
Monday, and also happy start of the month. First
yes,
official
happy
day start of the month.
first day of the month.
Yeah,
Before we get your insights, Kelvin, let's take a look and see how markets across the region are performing. We start first, however, with Bitcoin, which is below the 26,000 mark. It's at 25,986, up 0.43%. Ethereum is at 1,638.61. It's up 0.18%. Now, looking across the regional stock markets, we start with the KLCI. That's up 0.02%. Shanghai is up 1.08%. ASX or ordinaries is up 0.38%. The Nikkei is up 0.41%. The Hang Seng is up a whopping 2.5%. And rounding up the numbers, we've got the Kospi, which is up 0.43%. Calvin, your view on market performance in the first half of the day, particularly the sea of green on one hand,
uh,
and also then the Hang Seng, which is up very sharply.
yes, precisely. So, if you look at the one of the catalysts that is the what I call positive catalyst that is driving this short-term bullish momentum, is for sure is number one. There's some encouraging news out from China, where Country Garden, which is one of the major property developer that is facing a disastrous liquidity crunch at this point in time. On last Friday, they managed to negotiate with its creditors to actually have a bit of a grace period to actually delay its due bond payment, both in onshore and offshore. So that give a bit of what I call positive sentiment back into the Hong Kong market. And bear in mind that the Hang Seng indexes, they were actually closed on last Friday due to this fear of this typhoon, and that is kind of a lagging effect. But on the other hand, over here is that what we could see over here is that we talk about the non-farm payroll data, which is a important data out of Friday. So what we could see over here is that the US job data is kind of mixed. So it actually indicate that potentially the Fed is more or less has done its interest rate hike trajectory. That means going forward, at most we will have one more hike in the month of November. Then that's it. And due to the fact that because of a kind of a lukewarm reading on the job data, where we start to see on August, it actually came in at 187k jobs added. But yes, that's above expectation, 170k. But bear in mind that last month's data for July was actually revised downward from 187k to about 150k, if not wrong. Yeah. But all in all, right, it's actually showing 3 consecutive months of below 200k of jobs added. And the unemployment rate for August actually shoot up to 3.8%, above expectation of 3.5%. That come in at the highest unemployment rate since February last year. So all in all, right, it seems to me that this latest set of US job data is now showing signs of what I call gradual slowing down, which i.e. it means that the close to about 1.5 year of interest rate hike by the Fed has starts to actually be felt slightly negatively in the US job market.
Now, Kelvin, then I want to look at the effect of the non-farm payroll on Treasury yields, which has resulted
Yes,
in the steepening of US Treasury yields. Walk us through that and what is its
sure.
impact on equities as well.
Yeah, definitely. So if I want to take it from a short term to a longer term perspective. So from the short term perspective, definitely is positive. So that's why we see that positive reaction right after the non-farm payroll data has been released. So what it means that over here is that this current steepening of the 2-10 treasury yield, that means the difference between the 10-year treasury yield and the 2-year treasury yield. So yes, they are kind of still being inverted, that means in negative territory. But however, this negative territory, the levels start to actually narrow down. That means, i.e., if you look at from 25th of August, the spread between the 10-year and 2-year is at negative 0.85%. And right after the last Friday, after the release of the non-farm payroll, then at the close of the US session, this spread between the 10-year and the 2-year has actually kind of narrowed down to negative 0.7%. So that's actually what I call a steepening of the yield curve by 50 basis point. But yeah, that's initially that was actually positive. Why? Because if you look at the scope of the rate of increase, so the rate of increase between this period, 25th August to 1st of September, the 2 year actually increased much as a slower rate versus the 10-year Treasury yield. So the thing over here is that why the 2 year is actually increasing at a slower rate, because due to the fact that market is now has to price in that there are actually higher chances that the terminal rate for the Fed fund rate will come in at 5.5% to 5.75%. So that only implies one more rate hike of 25 basis point before 2023 ends. And also right now there's an increased chance of close to 60% and 80% for the first rate cut to actually come in the next year May and June FOMC meeting. So overall, this is more like a short-term bullish sentiment that is being feedback into the US stock market. However, right now, if you look at a longer-term perspective over here, is that the current trajectory of the 10-year Treasury yield is not actually reversing to the downside. In fact, it's actually still increasing. So last Friday, it managed to bounce off from a key medium-term support at 4.09%. So with that said, right, if the 10-year Treasury yield continue to actually increase at a faster rate versus the 2 year, so this particular steepening, right, is actually called a bear steepening instead of a bull steepening. So in a bear steepening scenario, from a longer term perspective, it's actually not good for equities, especially equities on the longer duration equities. That means equity that are more growth oriented and do not have a stable dividend payout.
On that note, Kelvin, thank you very much for your insights. Thanks for coming on the show.
My pleasure, Brian.
Now, we've been speaking to Kelvin Wong, Senior Market Analyst at Oanda on BizTech's Asian Midday Market Watch. I'm Brian Fernandez. Check out this interview on our website, www.biztech.asia, as well as our syndication partners, TV stations, radio stations, and websites. Thanks for tuning in.